Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It's lecture time. And this week, guys, we're going to talk about how to scalp effectively, all right? A lot of you out there are scalpers, but you're not fully understanding how to take advantage of these 30 cent, 50 cent, $1 moves, okay? I talk a lot about 2R all or nothing and longer term trading. Well, today we're going to talk specifically about scalping. The beauty of scalping, guys, and I want you to really internalize this, is if you take 3, 4, 5 trades a day, maybe even more than that, you realize you only have to be right for like 10 minutes a day, 15 minutes a day, because most of these scalps you're going to be in and out of in like 1 to 5 minutes. So if you took a few trades, you could literally have all of your trading done. It may take an hour to find those scalps and take them, but the actual trading is literally like 10 minutes a day. So the beauty of that is you can have a very high accuracy level, very high batting average, because you only need to be right for like 2 minutes at a time. And that's pretty easy to do. You're not Nostradamus. You don't have to be right, 10 years in advance. So it's a really powerful lecture, and I think it will help many of you better understand scalping, but also increase your profitability because there's a lot of little nuances to scalping that I think a lot of people don't fully understand. All right, so great lecture today. If you like these videos, click that like button, hammer that subscribe button. I am Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is effectively scalping stocks. We've been talking a lot the last 3, 4, 5, 6 months about scalping. The markets have changed slightly, and we've just been in more of a scalp mindset, scalp mode. Now, having said that, if you're still looking for larger targets, you can do that too. There's still plenty of traders shooting for 2, 3, 4R targets that are doing quite well. But we've just, with options and stocks, we've moved to more of a scalp mindset. So I thought it would be a good idea, even though we have talked about scalping a lot, to really just dig in on some charts that we've taken, trades we've taken over the last 3 or 4 days, actually mainly this week, so that you guys can get, I guess, a more concrete or better understanding of what the thought process is, what goes through the head, what goes through the mind when we're looking to scalp something. Because I think a lot of you just think, oh, it's a double bottom read, I'll take it. Oh, it's this, I'll take it. There's a lot more than that. And maybe a month ago now, I did a lecture talking a little bit about this. But today I want to reconfirm some of those things and add a couple new things to it. And this is almost entirely charts. Again, I think there's 1, maybe 2 text slides in this whole presentation. There is not a when will the insanity stop this week, because I thought, let's keep it positive, so give you guys a break from that. So let's take a look. Let the chart speak to you. That's a common mantra you hear me say. Let the chart speak to you. Be patient and wait for the proper entry. But then the question becomes, well, what does the proper entry look like, right? What is it that you're actually looking for? And to be clear, you guys should have pictures of this in your office, in a notebook, on the wall, wherever, but somewhere where it's very close that you can reference exactly what you're looking for. I find that most people, not just traders, just people in general, are visual. All right, you tell them something, that's fine, but if you show them something, that's better. It's kind of like when people see a new house and it looks great and there's curb appeal. A lot of people could have never done that themselves. They needed someone to show them on a 3D model or a computer what it might look like. It's the same reason people have such a hard time picking out paint when they go to the store. Like, I don't know which color I want. So I find people are more visual, all right? So even though we're going to go through these bullet points, we're going to see them visually over the next 10 slides. And I think you guys should also, again, either have them on your wall, quick reference, or in a notebook on your desk, 3-ring binder on your desk, somewhere you can quickly reference these things, because the more quickly you ingrain these things in your mind and your head, they'll get to that unconscious confidence level. And that's where you need them to be. You need to look at it and go, yeah, I've seen that 100 times before. I know exactly what to do. Exactly what to do. Not, I don't know about this. No, I know exactly what to do right now. Okay? So look for stocks that are extended into support. Okay? Ideally, have a retest of support. Okay? Have relative strength to the market there, or weakness. Okay? Relative strength or relative weakness to the market. A possible failed pattern to confirm the entry. That's a good one. Okay? matched with a higher time frame, and also wait for other confirmation, like a bottoming tail, support and resistance area, volume spikes, micro trend changes, trend line breaks. All of these things matter. And you're going to get to a point where you might look at this list and go, wow, there's 10 things on this list. You're going to get to a point where it's like, click, click, done. Like your unconscious mind will go through that checklist in half of a second. You'll just see it and you'll know. I use this analogy a lot, and it's just a good analogy. It's like Neo in the Matrix. All those numbers to you and I look like gibberish, but to Neo, it makes sense. That's the way when you look at a chart. And here's the thing, though. If you look at the chart and it doesn't immediately make sense to you, it's probably not going to make sense to you 5 minutes later unless something dramatically changes. My point is most of the great trades, you know them right away. You look at it and go, oh man, that's so nice, or wow, I can't believe I missed that. It's so good. All right? So I want you to keep that thought in your head. Most of the great trades you'll recognize immediately. You should probably write that down. Most of the great trades you'll recognize immediately. So you got to ask yourself, if you don't recognize it immediately, should you be taking it? If you don't recognize it immediately, should you be taking it? Now, granted, if you're a newer trader, then it's going to take you a little bit to discern these things. Extended into support, relative strength, higher time. I get that. But if you have some experience under your belt, a year or 2 or 3 years into this, these things should be just clicking, 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 right? So again, if you're new, fine. It's going to take time. All right? So you may not recognize it in the first, 30 seconds you look at it, first minute you look at it. But that's the whole point of doing this over and over till it becomes unconsciously competent. So if you've done if done properly, you only have to be right for 1 to 10 minutes. I want you to think about that for a second. If done properly, because we're talking about scalping at the moment, you only have to be right for like 1 to 10 minutes. Now, in the course of a 6-hour trading day, 6.5-hour trading day, to only have to be right for like a total of 5 minutes or 10 minutes, think about that. Total. You could take 3 trades and each trade lasts 3 minutes and you're done in 9 minutes. Now, it may take an hour to find those 3 trades, but you only have to be right for 9 minutes that day. That's not bad, right? We're not asking you to be Nostradamus and predict the future for the next 20 years. You just need to be right for a few minutes here and a few minutes there and a few minutes here and there. That's it. So the reason I'm commenting and the reason I'm saying that and the reason I'm putting it on the screen is because I want you guys to realize that there's always another trade. Always another trade. And if you're not sure about it, write it down, maybe take a picture of it, put it off to the side and say, you know what, when the market closes, I'm going to come back to this. I'm going to review that. But right now, I'm not confident enough to take this trade because I work really hard for my money and I don't want to just give it up to the market, right? I just don't want to just give it up. So I don't understand that one right now. I'm going to push that one to the side. Now I'm going to move on to other ideas. And it may take 20 minutes to find that next idea. It might take 2 minutes. But that's okay. That's part of the process of being a good trader. Okay? So if done objectively, we can accurately predict the future and profit from it. But you only have to be right 5 or 10 minutes a day. That should kind of make you feel pretty good. That if you're going to take 1 to 5 trades a day, some people take more than that, and you only need to be right for like 10 total minutes that day, maybe 20 total minutes, not bad. All right? So write those things down. And again, add to the list. I put etc. right here. There's certainly more things you could add to this list, but these are the things specifically that I'm looking for. Extended into support. Have a retest of support. Relative strength. Possible failed pattern to confirm entry. Match with a higher time frame. 15 minutes, 60 minute, daily chart. Wait for other confirmation. Bottoming tail, support, resistance, volume spikes, microtrends, etc. Okay? So, let's take a look. Double bottom retest plus a breakout. Now, you guys, you knew this was coming because I was so upset at myself for missing this the other day. It just bugged me because we actually talked about it. It's fine when you actually just flat miss a trade, right? Oh, well, you missed it. But if you talked about it, shouldn't have missed it. So what we have here is we're always going to start right with a higher time frame. So we have a daily chart and then a 10-minute over here. And you're like, 10-minute higher time frame? I'll explain. All right. So the daily chart has a gap up to that $59 or $60 area. Sorry, my bad. $65 or $66 area. My bad. And then it immediately just sells off. Just immediately just gets crushed. Right. And you'll see that right here. 65, 75 on the 2-minute chart. And then it pulls all the way back to 63.50 or 64, okay, and just chops around. Why? Well, because that's the first level of support on the daily. First level of support on dailies, that's $64 area. So you saw a reaction, a little bottoming tail. And you would have, with this gap up, expected this area to have held, but it did not. It continued to go lower. Now, here's the problem. Do you take the first entry at 62.50? Now, you could, and you could make some arguments for doing so. You could sit there and go, well, it is a gap up. It's extended down. It's at the 50-period moving average. Nope, it's right there. Just a little bit below, perhaps, the 50-period moving average on the daily. You might say, oh, that's tempting. Now, maybe. I think it's a little bit aggressive. Kind of like AMD today, it's a little bit aggressive for us, right? It bounces, and what if it bounces and just goes back to the high of the day? It just becomes a next, oh well, missed that one, didn't take that one, not enough confirmation, right? So if right here on the first trade at like 9.55 or whatever that is, if you choose not to take 62.50 because it's too aggressive for you, I'm okay with that. There's nothing wrong with that, right? And if it continues higher and doesn't give you another entry, then oh well, right? In this case, it retested the low, pretty much held the low of the day. Maybe it broke it by a few pennies. Now all of a sudden things change. Now you're getting your confirmation. You're getting your retest. You're still at or near that 50-period moving average after a monster extended move. In fact, when you take a look at this daily chart here on the right, I mean, this is one of the biggest pullbacks this stock has ever had. So when you think about it, you're like, man, this stock has just pulled back $5, $4, whatever it is. There's a good chance that this is going to bounce at least a little bit off the lows. Because one, it was a pretty potent gap up. Two, it's near daily support. Three, it's near the 50-period moving average, and it has a double bottom retest with a bottoming tail and a green bar engulfing the red bar. There's a pretty no-brainer entry at 62.50. Now, you could put your stop loss here at 62.25. You certainly could do that. I tend to give them more room. So for me, I'd probably give this thing $62, right? I'm giving it more room. And the target is 63. Now, depending on how big of a scalper, meaning how tight of a scalper you are. For me, if I had a 50-cent stop, I'd probably look for 25 to 30 cents on this thing. But it does have room to $63. So if you wanted to shoot for 50 cents with a 50-cent stop, you could do that. Or you might take the tighter stop loss. You might be of the opinion, you're like, this is the double bottom. It shouldn't break the low, and if it breaks the low, I don't want to be in it. So you might just say, all right, I'll give it a nickel under the bottoming tail right here, and that's fine. And then you can shoot for a 50% retracement, which is 1R, and a 100% retracement, which is 2R, and that's fine. So after it gets back to 63, it does the perfect thing you'd want to see any stock do in this scenario. It consolidates out at that resistance area, but it does so 1, 2, 3, 4, 5, 6, 7, 8 bars. So it's got a lot of rest here. 8 bars sideways, right around 63, a little bit above. And that's right where that little kind of pseudo double top is. I want to see this. And I want to see that bottoming tail. That bottoming tail sells you on this thing. There's multiple bottoming tails. Bottoming tail here. Bottoming tail here. And all of a sudden now you're going, man, the more this consolidates, the more likely it's going higher. So there's another entry at 63, 63.10. You have a choice. And yesterday we talked about 3. The stop loss could have been 62.70. Excuse me. The stop loss could have been 62.70. Stop loss could have been 62.50. That's just giving it more room. And the stop loss could have been the low of the day, 62.20. You had three choices of stop loss there: the tight one, the middle one, and the wide one. We talk about this in professional trading strategies, and that the wide stop gives you the most flexibility, but it also lowers your potential risk to reward. The tight stop gives you the best risk to reward, but gives you the least amount of flexibility. The tight stop basically says, hey, this stock has to hit and run. Now for me, I probably would have given it the mid-level stop, 50 cents, because breakouts lately, they've been a little choppy. They've been popping and dropping. So I want to have enough room for the shake, right? Enough room for the shake. And then I would have looked for 30 to 50 cents. And in this case, this stock went from 63 to 64.50, almost $1.50. But what are we doing? We're putting multiple concepts together. We're looking at the daily chart. We're looking at the moving average. We're looking at how extended the stock is. We're looking where it's extended at, right, on the daily and the 15, the 60. We're looking for the double bottom retest, right? We're looking for all of these areas that give you confirmation. And even on the consolidation, what do you have? A volume drop, which is continuation volume, quiet volume, which is exactly what you want to see inside of a consolidation. What are we also adding? Micro bottoming tail on the 2-minute right there. Micro bottoming tail on the 2-minute right there. Okay? So we're putting all of these things together till we get to a point where you're like, I have to take the trade. There's so much goodness here, I can't not. It's like you're checking all the boxes and you're like, well, I have no choice but to take the trade. Okay? Let's move on. All right, we'll be here all day at this point. Okay, here's another example. NVIDIA. Now, double bottom retest, not with the breakout, so we'll move that off. I forgot to change the title here. All right. Now, we're going to look at the 15-minute as our higher time frame here. We go to the 15, and what do we have? We have 15-minute support right around 464, 465. Right in that area, because it is a range, we see the stock bounced over here. It retested and bounced again. It retested here and bounced again. All right, it retested here and bounced again. And now you're pulling back into that exact same area. So the stock opens with a small gap down. Okay, you can see it on the 2-minute. And it breaks down below this 463 area. Okay, and then it bounces and retests. But the reason I'm showing you the 1 and the 2-minute is so that you can see inside the 2-minute. You see, a lot of people on the 2-minute would call this a double bottom, but really it's a triple bottom, right? Take a look at the 1-minute. So over here, right there, right around, I don't know, 950-ish, okay, 950-ish, we have a bounce. But just after 10 o'clock, there's another bounce. And you can see that more clearly on the 1-minute. There's the original 1-minute bounce. And then there's the pullback right after 10 a.m., 10:03. So really, if you look at the 1-minute, it's almost like a quadruple bottom, right? It bottoms, bounces, retest, bounces, retest, bounces, retest, bounces. It's 4 times it's tested this area, okay? 4 times it's tested this area, okay? And you're sitting there and you're like, it likes this area, right? So by the time you get to this aggressive entry at 462-ish, it's not that aggressive anymore, right? Because now you're like, wait a second. It's tried this area a lot, okay? And now it's bouncing back up. So when you finally go to take it over here, it's not insanely aggressive. There's not a ton of room to this target area, right? Because your first target would be right in that area, right? That would be kind of your first target area. So it does give you, I don't know, $1. Just, I mean, you're probably getting in at like 461.75, okay, something like that. But it gives you like $1.25. That's fine, right? And then it gets a bit choppy up here, and maybe you could trade it to 464. So this is an aggressive entry, but when you start breaking the chart down, it's not that terrible, right? It's not that bad, okay? And if you take a look, same stock. Okay, same stock, but now we're looking at the market, right? The market's very similar to what we're looking at, okay? So when you take a look at the Qs on the 2-minute, you're looking at a stock, you're like, wow, the Q is right around that time, which is 10:15-ish, give or take. I might be off by a couple minutes, but 10:15, the market starts to do what? 1 bottoming tail, 2 bottoming tails, 3 bottoming tails, market starts to leave bottoming tails. So as the market triggers this area, so does NVIDIA. Right? So is there incredible relative strength? No, there's actually some relative weakness, but you're timing it correctly with the market. Okay? So while this is a slightly aggressive double bottom on a 2-minute, it's quadruple bottom on the 1-minute, and it is timed with the market. Okay? And I would not have expected 469 out of this. I would have expected the first target 463, second target probably 464, 465. Okay? Going to keep moving on because we have quite a few of these. All right. Next, match the higher and lower time frames. Okay. So, whoops. There we go. What do we have on the daily? Johnson & Johnson. Always start with the daily. We have a stock that actually gaps down right at this green line, and that green line is support. Daily support. Daily support. Okay. Good chance you're going to get a bounce here. The previous day was very bearish, so a little bit extended. Not a lot, but a little bit extended. But you are also at a support area, okay, that minor price support area. And then you take a look and you go over here to the 1-minute and you're like, wow, bottoming tail on the first bar, bottoming tail on the third bar, bottoming tail on the fourth bar, bottoming tail on the fifth bar, bottoming tail on the seventh bar. How many bottoming tails do you need to recognize that the buyers are stepping up right at 166 over and over and over and over and over again? They're stepping up all the time. So now you're saying to yourself, well, I could bid for a stock at the bottoming tail area, but that's a little bit aggressive. Okay, now the good news is we do have a 200 period moving average at 165.26. That's good, right? That's acting as a confirmation of support. We know there's some support here at 165, 166. And the moving average at 200 is sitting there too. So that's just one extra thing we can add to our checklist. Okay? So then you look at this and you go, ooh, what is that? That's a 1-minute sell setup failure. Take a look at it. Topping tail, little sell setup right there. And is this the world's best sell setup? No, but it's one more level of confirmation. That's all we're looking for. Just give me more reasons to take the trade till I have so many that I can't say no. I have to take it. Okay, so we gap down at daily support. We're near the 200 period moving average. Okay, so we have 3, right? More than that. Gap down at daily support. Near the 200 period moving average. In fact, I should add this to the thing. I don't know why it's not in there. Near daily 200 MA. Okay, I got to make it all caps. Okay. All right, so we have our near daily support, near our daily 200 MA. We have 5 bottoming tails, which should be above the sell setup. 5 bottoming tails. That's 3 things now. Fourth, sell setup failure, right? Sell setup failure. Fifth, relative strength to the market. If you had the cues, and we can see that here on the last slide, what's happening at 9:45 in the markets? Well, the markets are pulling back, right? See, right here, 9:45, 10 o'clock, they're pulling back right there, okay? And if you take a look right here, whoops, wrong one, there we go. All right, sorry about that. All right, this stock is holding pretty well. So I have 5 reasons to take this thing, and I have room back to 167.50, which is kind of that yesterday's close area. So if you're getting in here right around 166.75, you can put your stop loss at 166.50. That's tight, okay? Or you can put your stop loss under the low of the day at 166. So let me repeat. Possible entry is right around 166.75. You could wait for 167, a little bit late, but 166.75 entry. Tight stop is under 166.50. Wide stop is 166. Target, back to 167.50. 75-cent target. Wide stop 75 cents. Tight stop 25-30 cents. Middle stop maybe 50 cents. And this is a trade that we took. There's your target. This is just gravy. I was not expecting that, right? And that's what you're doing, just going through the checklist. Let's do it again on Meta. Now, I don't have the higher time frame on Meta because I'm looking at this as a micro time frame transition, all right? So Meta has multiple bottoming tails off the open, then it goes lower. But it bounces with a wide range green bar, and then it retests this area at 315, right? Bounces, retests. Would I take it at 316 here? It's aggressive. You could make an argument for it. But without more information, without the market, without a higher time frame, I'm not so sure, right? You could argue to take it, but that's a pretty aggressive entry, okay? Then you have a little sell setup, right? Tiny little sell setup right here at 316. And that sell setup fails. Then we have one more thing that's not listed on here. It broke above the high of the day, right? So we have a double bottom retest, a double bottom retest, a failure of the sell setup, a higher pivot high, and new high of the day. That's a lot. I'll repeat it. Double bottom retest, failure of the sell setup, higher pivot high, new high of the day. Now, you're looking at this going, just give me a pullback. Just give me a pullback. And sure as shit, gives you a pullback right where it's supposed to stall, right in that range. It pulls back where? To support. The area the stock last bounced was this area right here at 316, 316.50, right? Previously, the stock bounced heavy and hard in this area, pulls back to that same area, gives you a bottoming tail, and you're getting in right there at 317-ish. Your stop's going to be right there at 316. You're going to go back to the pivot at 319. We took this trade yesterday. We took this exact trade yesterday, okay? This is near perfection on a micro time frame transition. They don't get much prettier than this, okay? But what are we doing? We're taking our checklist and checking every box. Check, 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 and making sure we don't miss anything. All right? And this stock ended up going, I don't know, $6, $5, whatever it was. But that target area, resistance first target, is roughly 319-ish, and you're in at 370. It's $2. Your stop loss is $1. Even if you give it a wide stop loss, you still get 1R back to that. And then you see the reaction, a little topping tail. It got back to the prior pivot high. There's your topping tail reaction, and then moves up. Okay? Let's do it again. AMD. This stock gapped up, all right? Gapped up over that little crappy 2-day consolidation, whatever you want to call it, right there at 115-ish. Okay? So we take a look. Stock initially pulls back and then rips. Initially pulls back and then rips. Take a look at the rip. It goes from like 113, I don't know, 25, all the way up to 115.50. Pulls back, bounces, pulls back. Now, why am I bringing this stock up? I'm bringing this stock up because somebody in the chat room mentioned this stock yesterday, okay? I said, if you like this stock to go higher, you don't take it at 115.50 at the double top. Sorry, I'm sitting here reading this as I'm doing this, and it should say double top. Okay, sorry, my bad. Hate when I make mistakes. Okay, you don't take it at 115.50 at the double top. You take it at the pullback area of 114.75 or 115. And this is the exact conversation we had yesterday. Somebody was saying, Jared, what do you think about AMD right around 115.60 or 115.50? I said, why would you take it there? Why would you give up 75 cents or $1, okay, just to wait for the high? And then that high also happens to be a double top resistance area, which also happens to be the daily 50-period moving average, right? And you sit there and you're like, that's a very curious place to take a trade, right? Double top at the 50-period moving average on the daily. It's a daily 50, not a 2-minute 50. It's a daily 50. There's almost always a reaction. Well, in this case, there were two reactions. There was a reaction over here right around 9:45, and there was a second reaction around 10:15. So by the third time, it actually continued higher. But why? If you like this stock and you believe there's strength, you're going to buy that pullback. Do I think this is slightly aggressive? Little bit of a tough trade? I do. But I like the bottoming tail here at 114.50. I like the engulfing bar here at 114.50 up to 115. I'm going to take it in that range, 114.75 to 115. And I'm going to shoot for 115.50, 115.60. Makes sense? So again, I'm not wanting to wait for the high. And if you did, then take a half lot at 115 and add when it breaks the high of the day, after it breaks, because you're expecting to see some type of reaction here at 115.50. Why? Because the 50 MA is there and a double top is there. You should expect a reaction there, just same way you expect a reaction on a double bottom. So don't wait. This is a late entry at 115.50. You're getting in at 115, maybe 114.75, and you're selling at 115.50. And if it gets above that area, it's gravy. It's gravy. Okay? All right. 3-bar play based on the 15-minute. This was Tesla yesterday. Note, Tesla opens with a small gap down, right? Small gap, and then just gets rolled on, just gets crushed, goes sideways, resting bar, resting bar. It's actually technically a 4-bar play, so I should say 4-bar play. All right. So we take a look at the 4-bar play, and it triggers right there. Nothing wrong with it. Drops, pops, drops. Okay? Pops back up, continues to drop. So when you take a look at it, you always want to look at the higher time frame. And you look at Tesla and you're like, ooh, there's a little 15-minute double bottom right here, support area, right? Pivot right there from the 28th and it bounced. A pivot right here from the 31st and it bounced. And then today, or yesterday in this case, it tested that area. And guess what happened? There was a reaction. The reaction was the 10-minute resting period. So the initial wide range red bar went right down to that double bottom, 264, 263.90, whatever it was. It went right down to that area. And then what did it have to do? It had to fight a little bit. For 10 minutes, Tesla had to fight it out at 264-ish. Right? See the doji bar here, doji bar here? That's exactly what that is. Buyers and sellers in the middle of the ring slugging it out. And the sellers are like, we got this. We got this. And then the 5th bar of the day comes in, 4th bar of the day comes in, and a big red bar comes in, and you're going to short it right there with a stop here. If you want to give it a little room, fine, 265, drops, bounces, sell setup, bounces, continues lower, little double top. It never broke that 5-minute trend line, right? It never broke that 5-minute trend line. And then it held that area down here at 260. This is your tradable void, 264 to 260. The expectation must be known before you take the trade. So if you're getting in at, say, it's 263.75, your stop's 260. It's a $1.25 stop. By the way, we shorted Tesla yesterday. $1.25 stop. You're sitting there and you're like, okay. If I'm an all or nothing trader, I better make sure there's $2.50 here and take a look at the tradable void. You're like, okay, it puts me at 261.50. Okay, it's doable. It's doable. If you're a 4R trader, this is a tough trade. If you're a scalper, this is the easiest trade of all of them. You should get that initial drop, which you did, and it dropped down to like 262.25, and it gave you about a $1.50 drop, which was more than 1R. And that's it. We took it. We walked away. Okay, that's how you scalp this, but make sure the higher time frame's in alignment with your expectation and your thought process. Okay, here's another one, Rambus. Oh my gosh, from yesterday. All these trades popped up yesterday. Big gap down, okay, big gap down right there, and we expected the stock to go lower, right? I don't know why this chart says the chart is unbiased, higher. We'll just leave it as the chart is unbiased. All right. Sometimes I forget to change the heads. Anyway, this stock had a very nice gap. In fact, in the pre-market, I said Rambus is one of my favorites, and the price point I gave was $55. I said watch Rambus under $55. Well, what happened was right before the market opened, 5 minutes, 3 minutes, 2 minutes, Rambus tanked. It was literally sitting at like $56 pre-market, and then a minute, I should have probably put that on here, a minute, 2 minutes, 3 minutes before the market opened, it just dropped. So when it finally opened, it actually opened at like $52.50. So I'm looking at this going, you piece of SIHT, right? I wanted this thing at 55 and you're already down $2.50. You're just down too much. I'm probably not going to short it. But to my surprise, it kept dropping, right? It just kept going. And it went down to like $48.50, $49. So what do we have? We have a stock that's now down some 15, 20% on the gap. Got smoked off the open, but it didn't just get smoked off the open. It put in a double bottom, right? Take a look at this here. There's your little double bottom. Okay, right there. So now you take a look at that and you're like, wait, it's getting absolutely crushed. Bottoming tail here on the first 1 minute bar of the day, retest the low, bounces. Now, an aggressive entry would be $50. In fact, I mentioned this entry. I did mention this yesterday, like $49.75 to $50. But this was a little bit too aggressive for me, but I did mention it. If you go to the daily, it's in that range, okay? It's in that range, $50. I'm like, it broke below it, monster volume. This thing looks pretty good. So again, aggressive entry, $49.50 to $50. It bounces back up to the high. And what's it do? Instead of pulling all the way back, it consolidates. What does the consolidation at the high of the day mean? The consolidation at the high of the day after such a move like this means buyers aren't done yet, right? People are bargain hunting. They're still bargain hunting, right? Double bottom after a significant move, retest the high day with a range expansion bar, and then it just chills out. Doesn't break 52. That's not bad. Take the breakout right there at like $52.50 to $53. All of this is tradable void. All of this is tradable void. The stock ends up going like $3 or something like that. With a stop loss, it was probably about $1. Was the stock aggressive? Yeah, because it was spready and whippy. The stock was all over the place for a little bit. It really was. The first bar of the day was just insane. This wide range expansion bar from like 50 all the way to 53 was insane. So I get if some people held off, but this is actually a pretty good breakout because of where it went to on the daily, because of the double bottom retest, because of the extended nature of the stock, because of the wide range expansion bar, and because of the lengthy consolidation back to what would be a likely moving average if it were there. These are the things you're doing. You check, 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 check. Okay? You guys remember this one yesterday? Netflix. Netflix gapped down a little bit, got smoked. Not smoked, really. It dropped $5 or $6, which is a decent amount. Bounced back up about 90% right here. People were expecting what? Sell setup. And it gave you a sell setup at 436. And then it failed the sell setup. So now, what do I have? I have a stock that was a little bit extended on the short side, did a 90% retracement. If this stock was really, really weak, it should not have done a 90% retracement. It should have been like a 50 or 60% retracement. So clearly there are buyers stepping up here. It has a pullback that should have been a reasonable sell setup, and I would have expected this to go to at least 434. Even with the 90% retracement, I would have expected like 434-ish. It didn't. It barely pulled back, and then the sell setup got smoked, right? Got crushed. That puts in a higher high and pulls right back to an area of support. This is an interesting buy area. This red line is resistance. We're breaking above it over here, but we're putting in what? Higher high, higher high, higher low, higher low. All of a sudden, this becomes a micro transition. Higher high, higher low, higher high, higher low. Okay? And you're like, Now, if you didn't want to buy it at 438, you could have waited for 438.50 till it broke that entire area right there. But this is actually a very interesting long idea with a stop loss down here at 436. Get in at 438, 438.50 right there. Okay, right there. Stop loss down here. Right there, 436, 435, whatever, $3, $2, $2 to $3 stop loss. Boom. Shoot for $2 to $3. And this thing ultimately ended up going like $6, maybe $5, something like that. It actually went almost 2 to 1. Okay, But that's how you do it. Be patient. Wait for it, right? Wait for it. You guys saw this one, I think, from last week. I just kept it in here. Moving average plus trend line plus a double bottom plus multiple time frame analysis. Higher time frame is the 15-minute on the right. Pink line is where it's holding support and bouncing off of. So when you see it retest that trend line and above support, it retests the orange trend line right here, and it's above support right here, and it gives you a double bottom retest. Take it. Take it at 494. It bounced here, and it's bouncing again here. Okay? Note, by the way, take a look at the breakout of 500. Look at the shake and bake. That whole number, the computer's like, ooh, let's screw some people. Pop, drop, pop. If you get caught out here, get back in it. That's a different lecture. But if you get caught out there, let's say you get in at 500 and it goes beep, beep, get back in it. Now, I would have had my stop under this area, so I probably would have held, right? Maybe. But if you do get shaken, get right back in it. Immediately. Like not at 500. Get right back in above this bottoming tail. And it moves higher and keeps on going. It went to like, I don't know, 506, 505, something like that. All right? But we already looked at this one last week, so you can review that. Guys, trading, we saw it last week. It takes confidence, patience, and discipline. Confidence, patience, and discipline. And the only way you're going to get the confidence is to do it, is to go out there and look at hundreds, if not thousands of charts. It's the only way it's going to become unconscious confidence. And you're going to look at it and go, yep, that's the one. You're going to look at it and go, nah, it's not for me. Right? That's what I want to see. I want to see people not take trades. When I get into a stock, I don't care if it's AMD or something else, I want to see people say, I didn't take that. Why? Because it didn't fit my plan. And that's the key, my plan. Okay? Only take what meets your plan's requirements. Don't be shifted or don't be influenced by others. Just because Unveil takes it, don't be like, oh, I got to take it too. Or, oh, Cass took it and he's always right. You know how tempting that is? Tell me you're not tempted at times when Aaron or Cass or Unveil calls somebody like, yeah, it's actually not in my plan, but he's always right, so I'm going to take it. I've done that before. I'm not lying. I've done it in the last 2-3 years. Oh man, Cliff's almost never wrong. I'll just jump in it. I've absolutely done that. 100% I've done that before. Yeah, it doesn't really fit what I'm looking at, but Cliff's rarely wrong. I'll just take it. You know how hard it is to lay off that if you're a newer trader? You have to. It's not your pitch, man. It's like, I trust Cliff, or I trust Cass, or I trust Unveil, or I trust Aaron, I trust all these people, but it doesn't meet my plan requirements. Don't take it. Don't take it. Write it down, learn from it, but don't take it with real money. Okay? So it's interesting because Jordan's making a point, you only take my trades that are wrong. That's not true. We had a winner from you, Jordan. I think we're batting 50% with you now. Remember, you revived yourself. You had a comeback, It's crazy and a shame that you need a comeback at 25 years old. You know what I mean? Most people, the comeback's at like 40 or 50 when they need money, but you needed it at 25. Now, I'm just joking with you. But on a serious note, don't do that stuff, guys. Right? If it doesn't meet your plan, just don't take it. Write it down. Take a picture of it. That's fine. In fact, if you want to take a look at Unveil's trades or Cass's trades, who's ever traded, just Jeff's trades, whatever, fine. But don't take it unless your plan says you should. Okay? Reduce your subjective analysis, create a systematic approach to trading, and build a thought process of success and confidence. That's it. Patience and discipline are your job. And it takes time to develop that skill. Unveil's learning golf right now. It's going to take him some time to develop that skill. Okay? Now, I have a hard time believing Unveil's going to become a great golfer, but every time I doubt him, he proves me wrong. Every time I doubt him, he proves me wrong. Okay? So it'd be foolish for me to bet against him this time, even though I feel the most confident this time of anything I bet against him against. But you get my point. The end of the day, you come in with a set of rules, and your job is simple. Follow those rules every day. And most of the time, you'll end up with some profits. Every once in a while, you won't. And the best part is you'll learn. And then your statistics become far more reliable because they're consistent statistics. They're not all over the place, right? So I know it's challenging, guys. And I know sometimes you feel a little lost and sometimes you're like, oh, there's nothing to trade today. That's okay. Be patient. Use discipline. As you gain experience, more opportunity and more ideas will present themselves because you've gotten better. You've gotten better. Okay? I find newer traders, honestly, most of them, from my experience, again, there's always exceptions. Most of them take too many trades. I see them taking 10 and 15 trades. You know what I mean? So anyway, use that confidence, patience, and discipline. It takes time. That's the one thing I want to impart in you. It takes time to be great at anything. And you're looking at it in weeks and months. No, I'm talking years to decades. Years to decades. Not weeks to months, years to decades. You're not really great at anything until you're 5-10 years into it. I mean truly exceptional 5-10 years. There are a few exceptions to that. All right? So I hope you guys learned a little bit more about the details of scalping, right? The specific things I'm looking for. And almost every chart that I showed you was something that we traded yesterday or looked at yesterday. Every one of them, except for I think the last slide. They're out there every day. It's rare we don't find 3 or 4, 5 trades a day. All right? So put together your list of requirements, your list of things that you have to take a trade, and do not deviate from it. But what I'd like you to do in the meantime is look at other people's trades that you respect and admire and write them down and go, hey, is there something from their trading that could benefit or help my trading? Because that's how you fine-tune your approach and get better and better and more accurate as you go along. All right, so hope you guys learned a little bit about scalping today. I'm Jared Wesley of Live Traders. We'll get back at it again next week.